in terms of the separation, you absolutely need to have separate bank accounts. And if you don't already have that, I'd be pretty surprised. When we work with clients, normally a business will be structured as call it a company or a trust, depending on the business owner and what's more applicable to their family. And so in line with that, you actually need to set up separate bank accounts for it. And another one that's helped with my relationship with my wife, Stevie, is really early on in our relationship when we started combining finances, it was actually quite tough to communicate about money. Because if we go dollars and time, as a business owner, especially a new business owner, what usually happened is the money in the bank account went like this. So did my emotions, and so did our ability to spend money on things like a date night. And so one week when there was, let's say, 20, 30 grand in the bank account, we'd go out to dinner, have a nice date night. And then the next week when Steve was like, oh, well, let's go out again, I said, no, we can't, because there's, there's hardly any money in the account, and that's not a really functional way of communicating about money. And so one of the big things that we did as a result of that was consistency. And this ties in with the other things I've got to share, is basically choosing a weekly amount that you pay yourself as a salary, or depending on your structure, it could be as a drawing from your business. So does everyone know, based on their business structure, whether they need to pay a salary or drawing? Mm-hmm. Cool, wonderful. And so choose a weekly amount that's consistent. Don't just, if there's money in the business bank account, don't just say, oh yeah, that looks like 20, 30 grand there, I can take 20 of it. Cool. You need a consistent amount that comes across from your business accounts into your personal, and that's what you work with. And you've really got to separate the two in your mind.